Hello students, I am continuing the previous video. How to write journal entries in case of if the bill is discounted with a banker. Seller frequently selling the goods to the buyer on credit. Say on 1/1/2020, say rupees 10,000 goods sold to buyer on credit. Now first one, when X sells goods to Y on credit, X is selling the goods to Y on credit in the books of X. Suppose X and Y, a drawer and a drawing. X in the books of X, X is what? X is selling the goods to whom? Suppose seller is X, buyer is Y. Seller is selling goods to whom? To the buyer. Who is a receiver? Buyer is a receiver. Y account debtor to what goes out? Goods goes out. From the point of seller, it is a sales account. Y is a debtor. Debtor balance is increasing. Another side, our income is also increasing. Being credit sales. Now here, when X is selling, then Y is purchasing the goods from where? From the seller. So what comes in? Goods comes in. For draw it is a purchasers account debtor to who is a giver? Seller is a giver to X account. Purchase expenses, our expenses is increasing. On the other hand, our creditor is also increasing. Being credit purchases. After purchasing the goods, the buyer is sending the promise, I will pay your amount after 3 months. For evidence of this promise, the seller is preparing the draft, sending to whom? Sending to whom? Sending to the buyer. For giving promise, no entry will be recorded in the books of buyer. For receiving promise, no entry will be recorded in the books of seller. At time of sending the draft, no entry will be recorded in the books of seller. For receiving the draft, no entry will be recorded in buyer's book. Now, after receiving that document from the seller, the buyer is referring each and every information in the document. If he satisfies, then buyer is writing the word accepted and signed by whom? Signed by the buyer. Now it becomes what? It becomes bill. Bill is sending to whom? To the seller. So from the point of seller, seller is receiving what? Seller is receiving the bill from where? From the buyer. Number 2. When X receives the bill from Y, or when X draws bill on Y, or when X receives acceptance from Y. Same meaning. When X receives the bill from Why? What comes in the books of seller? What comes in? Bill comes in. From the point of seller, it is a bill receivable. From the point of buyer, it is a bill payable. So what comes in? Bill comes in. Bills receivable account debtor. Who is a giver? Y is a giver. Y account is credited. In other words, our asset is increasing. Debited. Y is a giver. Credited. Being bill drawn for 3 months. From the point of buyer, buyer is what? Buyer is sending the bill to whom? To the seller. Who is a receiver? Seller is a receiver. X account debtor. Bills payable. The liability. Liability is credited. Bills payable account. Being acceptance given for 3 months bill. Suppose if the seller needs money before 1 month, 4/3/2020, he needs funds, but due date falls on 4/4/2020. Before 1 month, if he needs money, the seller is selling the bill to whom? To the banker. Selling the bill to banker is called discounting the bill. When X discounted with banker, this transaction is occurred only between X and banker. When X discounted with banker means X is selling the bill to whom? The banker. Seller is receiving the money. Our bank balance is increasing. Bank account debtor. Bank balance is increasing. Our asset is increasing. Debit. Bank account debtor means how much collected amount from bank is debited. Again debit. Discount. Discount is a loss for whom? Loss for seller. How much not received from the banker, it is debited in the name of discount. Discount is a loss. Loss is debited. 2. What goes out? Bill goes out to the 2. Bills receivable account. What goes out? Bill goes out. Bills receivable. Bills receivable is an asset. Our asset is decreasing because we are selling. Being the bill discounted with banker, no entry will be passed in buyer books because the transaction only between X and banker. Now continuing here, 4th. On due date, if the bill is honored on due date, when the bill, which type of bill? Discounted bill, honored on due date when the bill is honored. In the books of what? In the books of seller, no entry will comes because he already collected the amount from where? From the banker. 1 month before he already collected. On due date, if the bill is honored, he is not collecting the money he already collected. Money from where? From the banker. That is why no entry will be passed. Then a buyer is paying the money to whom? To the banker. So in the second entry, what is that? Bills payable, liability is there. Credit, it shows credit balance. Now we are debiting bills payable account debtor to what goes out? To cash or bank. Paying the cash to the whom? To the banker. Being the bill honored. Which bill? Discounted bill honored. Suppose if the bill is honored, on due date when the bill is dishonored. Dishonored means on due date the buyer is not paid amount to whom? Banker. Then on due date the banker is giving intimation to whom? To the seller, your party is not paid the money. Then the seller is going to the place of buyer and standing before him. So what is his position? Due from where? Due from buyer. Due to whom? Due to banker. Due from where? Due from Y. Y account debtor. Due to whom? Due to bank. Y account debtor to bank account. Being the bill dishonored. Now the term is over. Bills payable is debited here. Bills payable account debtor to cash is going or not going? Cash is not going. Due to whom? What is his position? Due to main person. Due to X. Bills payable account debtor to X account. Being the bill dishonored. Now in next video I am going to show the solution on this case. Thank you, students.